that we're talking about ramping up capacity, and this is with the Nimrana plant that is commercially live, and 1,000 crore MOU is what they've signed supporting its push into rail electrification as well as industrial cooling. Anushi is standing by to give us more details. The stock slightly under pressure today, but let's get it across to Anushi. Anushi, what should we be talking to KRN heat exchangers management, and something that we would want to know, the key highlights?
Hiral, the main story, or rather the main peg for KRN Heat remains on its 6x capacity addition plan that is in place in Rajasthan. Now, what they've done is subsidiary KRN HVAC had signed 1,000 crore of a MOU with Rajasthan government, and this is for a period of 5 years that they had stated. They came out with the IPO as well, but now they have started production here. So the key question would be on the subsequent ramp up. Initially, while we are looking at a 20 to 25% of a scale up, from FY27 it would be 50%, and then peak utilization levels in the next 2 to 3 years is something what the expectation is. So how is the current contribution shaping up like, and what would be the eventual scale up in terms of the top line as well, and to the overall contribution to the top line as well from this new facility is something that we should be asking the management about. In terms of the outlook also, exports is another key area that we should be concentrating on, considering that they're targeting a 50% of a mix here with more focus towards North America and Canada. Currently they have a higher mix in UAE, but that is also expected to tilt towards the other two segments that we are talking about. So that is another key area that we should be seeing. Along with that, about the latest acquisition also, how that is shaping up, what's the kind of revenue potential that they're seeing once even that scales up is something that we should be anticipating for. So these are the three major highlights that we should be asking the management about.
Okay. Thanks so much, Anushi, for getting us those details. In fact, that sets things up perfectly for our conversation with the management. We've got Santosh Kumar Yadav, who's the Chairman and Managing Director of the company KRN Heat Exchanger and Refrigeration, joining in. Thanks so much for taking the time, Santosh, and pleasure speaking with you. Let me start with that first question, which my researcher Anushi pointed out, which is the Nimrana plant update. With that plant now coming on stream, what is the implication for revenue heading into the end of this year and into the new year and starting of FY27?
Thank you. So it is, I think, same. We are on the same track, what we said before. So we said like this year we are going to achieve around 20 to 25% of this from new facility. And next year we are targeting to around 50% of this capacity. And recently, what you said before, we added one new product is bus air conditioning. So we transfer one BTA, business transfer agreement with the Spare Refrigeration System Private Limited. So they are in business since last 15 years. And about backward integration side, so we have complete backward integration for bus air conditioning, like heat exchanger, tubing, and then sheet metal, and then FRP. So if in terms of bus air conditioning business in India is growing, I think 20 to 25% each year, especially for conventional bus air conditioning and electrical as well. So we are entering in both segments. We already started billing, and next year we are targeting good business from bus air conditioning as well as our heat exchanger and other products, both.
Mr. Yadav, you've spoken about margin improvement over the course of this year and next in FY27 of 100 to 200 basis points. What is giving you the confidence that this will come through?
So as I said before, from new facility, we have two incentives. One from central government is PLI. So we will get for next 2 years, 1 year for like 5% and other year is 4%. Other we have one incentive from state government is called RIPS. So we will get around 1.5% for next 10 years. And other than we have like electrification, some saving because we have solar almost 8 megawatt on the rooftop. And then we will increase our export, so our margin is slightly up on export side. Secondly, bus air conditioning we added, so we have slightly good gross margin in bus air conditioning. So if I club all things, then we will able to increase 1 to 2% on our existing PAT.
Santosh ji, Neeraj here, good morning. I presume that you've clocked in the numbers that you have for the month of September, for example, the September quarter, without too much of contribution from the new business. And yet your margins have been at 20%. Your profit growth has been from 17 crores to 27 crores. safe to assume that this is the basic run rate that will last or could improve as capacity utilization ramp up of Nimrana happens in the second half of FY26?
No, this year, this will be, I think, remain same in terms of margins because we have like already overhead started and then depreciation also started from new facility, but revenue is still less. But next year, for sure, our margins will increase because of both incentive and as well as our productivity. Because this year we are not getting incentive from like PLI and RIPS. This year almost maybe last quarter we will have some from RIPS side, but PLI we are not getting. So next year we will have both incentive as well as have productivity. So that's why I'm saying next year for sure we will able to increase, but this year it will, I think, on the flat side.
Okay, the only reason I wanted some clarity on, so quarter one, if it was 15% and quarter two is 20%, right? EBIT margin. If indeed it stays 20 odd % for quarter three and quarter four, then your average margins for FY26 will be much higher than the 16% that you clocked in FY25. Fair assessment?
I think it will remain same what we achieve in quarter second.
Which is 20%. You did 20% in quarter two. If you stick to 20% and 20% in quarter three and quarter four, your average margins for FY26 reach up to nearly 18% versus 16% in FY25. Fair assessment?
Yeah, I think so.
Okay. And then that improves later in FY27, which means that your bottom line growth, Mr. Yadav, would be much faster than the top line growth for both FY26 as well as FY27. Again, fair assessment?
I think both will increase, bottom line and of course top line both.
No, but the bottom line growth would be faster than top line because of the margin expansion.
Because of this new facility, also we added some new products, so we have, I think, some good gross margin compared to our existing. But the refrigerator product also we have some less margin also compared to it. So if you club both, then slightly will what we give like before. So we will able to increase on like if you compare to quarter second, then 1, 2 or 2% we for sure we will able to increase.
So, Mr. Yadav, my question, I'll take a follow-up to where Neeraj left it, Hiral on this side. You're talking about the growth that you're seeing, but your top-line growth you've mentioned will be led by higher domestic mix, but you're already targeting 50% export mix in the next 3 years, right? And UAE is around 47%. USA, Canada is still in that 18 to 20% bracket. So will your mix actually tilt towards USA and Canada, number one? And two, with the export mix also increasing to 50% over the next 3 years, what impact will that have in terms of your margins and profitability then?
So let you correct, I think what we said before, 50% of export we will achieve from our existing product like fin and tube. But recently we added some other product as well in new facility. So if you compare to total, then percentage will be, I think, slightly less. But on fin and tube, of course, we are going to achieve 50%. But slightly now we have some issue from USA market because of this tariff. We are expecting, I think it will solve maybe next couple of weeks, which news we are receiving from market side. And margin, of course, there will be one region from export side, another, what I said, incentives, and then electricity, and then productivity, and then some other product. We have a good margin compared to on our existing. So if I club these all points, then it's able to achieve 1 to 2%, I think.
Okay. And Mr. Yadav, you mentioned about USA. So what are you saying with regards to USA? What is the impact you're seeing and what are you hearing right now in terms of the update when it comes to tariffs?
So our existing customer is still they are buying, but some we have new customer development. So I think slightly it's they are on pause situation because of 50% of tariff. So we and our customer expecting it will resolve soon. So that's why they are unable to give some big order because of 50% is quite high on our product. So that is the reason.
And when it comes to your PLI benefits, they are only going to start coming in by FY27. Plus you have some approvals that are 4 to 6 weeks pending. So any opportunity or savings that you're expecting which is not really accounted for right now but would probably come in?
No, this PLI we have already approval from government, but eligibility criteria this year we are not like matching. So, but next year we will achieve the criteria, and that's we are sure we will get. But RIPS we already applied our application, and it's times to like 4 to 6 weeks they take the approvals, and then once we have approval, then we will take benefit from RIPS, and we will have benefit for next 10 years.
You know, I mean, we're just seeing the issue price, 268%. From there is the kind of up move. A quick question, Mr. Yadav, on the data center opportunity. What's the order opportunity sitting there on that one? And update anything if you have in terms of the Visakhapatnam project. How much will this contribute to your revenues? Because the space is somewhere getting crowded, at least execution phase.
So that is a good question. I think I also forget to explain this because data center now we have news around at least 3 lakh crore maybe next 5 years going to invest in India, especially for data center cooling. And we are expecting at least 5 to 6,000 crore rupees of heat exchanger will be used in both projects or like all projects. And as of now, what we have capacity in terms of like our capability in production, space and infra. So I think expecting at least 50% of total orders to us from all HVAC data center manufacturing.
That's, let me get this straight. Over the course of the next couple of years, Mr. Yadav, you're talking about 3,000 crore odd of orders coming to you.
Yes, and in the next 5 years, especially
in the next 5 years. Wow, okay. All right. So at this note, at this point, let me wish you all the best on behalf of all of us here and look forward to speaking to you really soon.
Thank you.
All right, exciting times for KRN and certainly a stock to watch out for. It's recovered from the low point of the day while the management was speaking to us.